So group accounts point you will work out. Yes, conceptual framework. I will discuss a question about the conceptual framework as well. How to cover the points of conceptual framework. Although with respect to conceptual framework, first of all, you have to recall your knowledge quickly, bare minimum, read the study hub material or your notes or the study decks. Number two, practice question, whatever I've referred to you, 3 practice questions. Here I'm discussing a very basic question. Now let's start. Yes, this is a question. Hive company owns a machine. Read it carefully. Hive company owns a machine that is central to its production process. At the reporting date, the machine carrying amount exceeds its tax base. So question start with some deferred tax matters. The difference is due to revaluation of asset to fair value in the financial statement. Due to its importance, it is extremely unlikely that machine will be sold. At the year end, Hive company received 10 million from investor. In return, Hive company must issue ordinary shares of 12 months time. So another area of the accounting, investment, that is financial instrument points. Okay, the number of shares to be issued will determine based on the quoted price of Hive shares at the issue date. Here the requirement. So examiner also examine the conceptual framework with this manner. For each of the above transaction, number one, briefly explain how it should be accounted for accordance with IFRS. So that means very clear heading about a deferred tax and financial instrument. But SBR questions, in SBR questions, conceptual framework always integrate with the scenarios. Discuss why accounting treatment could be argued contradict with the definition given by conceptual framework. So that is the point. So that means here you need to incorporate your answer of conceptual framework with 2 accounting issues. For example, if you are covering deferred tax. So deferred tax very basic amount. Very basic about the accounting issue here. For example, the carrying amount as asset exceed tax base as per IAS 12, deferred tax liability must be recognized. Okay, very simple. The deferred tax liability measured by multiplying the temporary difference by the tax rate. Very simple. And tax charge is recognized OCI in case the revaluation. Deferred tax is application of accrual concepts added to recognize the tax effect of transaction in the period the transaction occurs. Also, this is what about the knowledge area of the accounting issue. Very basic. Hive has no plans to sell its assets. There is no present obligation to pay tax to arise in disposal. Now, the points of discussion here start with the conceptual framework. For if we record the deferred tax liability for the fair value adjustment, so in fact, fair value adjustment make here, and we are recognizing the deferred tax liability, but there is a question. Deferred tax liability we are reporting in a scenario that whenever asset will sell, we will provide that tax. That means deferred tax liability. But the point is that the company has no commitment at the fair value date that company will sell the asset. So if the company don't have any commitment to sell the asset, but IAS 12 says that even the company has no intention to sell the asset, but you have to record the deferred tax liability. So why it is? Because the requirement of IAS 12. Requirement of IAS 12. But first of all, you have to mention the conceptual framework. The conceptual framework defines liability as a present obligation of an entity to transfer economic result as a result of the past event. You know that there oftenly there are some contradictions between accounting standard, application of accounting standard, rules of accounting standard, and conceptual framework. One of the example is there. If we are recognizing the deferred tax liability here, there is a contradiction, because conceptual framework defines liability as a present obligation, but we are recognizing the deferred tax liability as a present obligation. If we are recognizing the deferred tax liability, here deferred tax liability is not actually meets the definition of deferred tax liability, because there is no current obligation. The company don't have intention to sell the asset. So what you should do first, whenever you are integrating the conceptual framework, I suggest that first you refer the knowledge of conceptual framework, then start your points. Very basic point. Deferred tax liability does not appear to meet the definition of deferred tax liability, does not meet the definition of liability according to conceptual framework. Very basic. However, board rejects this position, and board argues that increasing carrying amount of asset must result future economic benefit of reporting entity. Otherwise, carrying amount will be overstated, and these inflows of economic benefit subject to tax. So here board rejects the position about that. Board rejects what position? Board rejects the position that if we are not recognizing the liability, so actually the assets, it's now net assets become overstated here. For example, the fair value gain may be due to higher selling price of its output, which will therefore increase taxable profit. So board actually rejects the position with respect to the conflicts of the conceptual framework, and someone says that not to recognize the deferred tax liability because there is no liability. Board rejects this position, and board says that whatever the asset you are recognizing here or make a fair value adjustment, you will get some future benefit by using the asset. So if you are using the asset and get the benefit, then you need to recognize the deferred tax liability as well. So the board argued that tax is payable on the revaluation, irrespectively how the asset is used. I know that this is not the complete justification, but you have to mention your position accordingly. That is the point. Same for financial instrument, for example. First you mention, or whenever conceptual framework integrate your accounting issue, first of all you easily cover your accounting issue. For example, IAS 32 is financial instrument present that financial liability is a contract to deliver cash and another financial asset or variable instrument of own equity shares. Contract requires Hive to deliver as many as equity instrument. If the equity instrument commitment is variable, if equity instrument commitment is variable, that should be a financial liability. You know very well. An equity instrument is not a resource of entity, so contract does not represent obligation to economic resource. So according to the conceptual framework, this is not a liability because there is no obligation to pay cash, no resources. So this means that financial liability does not meet the definition of conceptual framework. Yes, exactly. But once again, although some of the accounting standard issues like IAS 12 or financial instrument not meeting the definition of conceptual framework, but accounting standard requirement always overrules and record accordingly. So this is actually the debate which have different angles and never be complete. But do remember, I wanted to complete my discussion here. Always overrule the accounting issues. Finally, students, focus and compose your mind. If conceptual framework, examine with integrated matter. Relax. First, you cover the accounting issue, and whatever the knowledge about you have the conceptual framework, do your best to apply the things. Examiner will never fail you if you are not properly integrate conceptual framework. If you not properly integrate your conceptual framework answer, but in examiner will fail you if you not try, if you're not able to put efforts to integrate the conceptual framework with the case. So in simple words, it's not about right or wrong. It's about your efforts, and already mentioned with the with with the examiner report. So just get rid of fear, get the knowledge. 3 questions, whatever I mentioned with my presentation, you have to attempt with your own, and that is all about conceptual framework. Go with the exam with that particular motivation. So this is all about module 4. Thank you very much. I will provide you the guidance with the module 5, how to tackle the current issues, performance measurement with multi accounting standard issues. So thank you very much. Take care a lot. Assalamu alaikum.